Welcome to the Health Daily Show, your go-to where leaders, founders, investors share insights on growth, innovation, business building. I'm Chitra Nabat. Joining us today is Kareem Zaki, partner, Thrive Capital. Kareem, welcome. Thank you for joining us.
Thank you for having me here.
Kareem, tell us about Thrive Capital. What's unique and different about your firm?
So Thrive, we're a venture capital firm. We operate a little bit differently though because we're industry agnostic, we're stage agnostic, we're actually geographically agnostic. Really just focus on one thing. We want to back category defining companies with long-term tailwinds. I know everyone says they want to be in the great category winning company. No one wants to be the number two, but we structure the firm in a way that allows us to really focus and concentrate on what we think are the really unique companies that are riding some of the biggest waves out there. And we approach that with a lens where we have a small unified team. We don't have different teams early in growth on the investment side, even on the portfolio impact and support side. And everyone's kind of looking across industries, trying to identify what are the breakout waves, what are the breakout trends, and how do we participate in that? And we actually build companies to kind of go do that. We invest early to try to go and do that. And obviously we invest throughout the life cycle and growth of businesses. And our hope is that we can be in a high percentage of the companies that we think are really shaping the way going forward, but also that we can hopefully be their most meaningful partner on their journey, that we can kind of align with them, that we can grow with them. And a lot of that comes from the entrepreneurial spirit of Thrive. Thrive started only about a decade ago. We feel like we're building the firm and we go and build and co-found companies, but also we feel like we're on the journey with founders. And the firm is really oriented around that, not just to help a founder think about this next product launch or how am I going to get to a Series B, or what do I do now that I want to go public, but just be in the company, think about all the dimensions around it, and be their partner through every step of the journey, and not just in our little slice as a focus on a certain stage or a certain sector, but know about the things that make companies dynamic. Business building is complex. You need a partner who can kind of ride shotgun, understand all the elements, and be able to push and drive that forward.
Take us a little bit into the secret sauce of the investment methodology, investment discipline.
So ultimately at Thrive, we want to make it a place that's attractive for the most ambitious people out there, the people who really want to push things forward. A lot of times they're young. We want to think about innovative and new things. And so we structure the firm to kind of go do that. But then we also set up a couple things that I think look a little different than most investment firms. The first thing is that we're not afraid to be concentrated. I think a lot of venture firms it's so hard, it's so risky, you can't expose yourself too much to one specific deal, and so they spread it across. We actually run it the opposite direction. We want to be concentrated. One, we actually think if you're concentrated, you're going to be much more selective about the companies you're going to go into. When you're betting and you know that it matters, there's a different level of rigor and engagement that goes around it. I think the second thing is that when you're very concentrated in a business, you're going to increase the probability that it's going to succeed because you're able to focus and do everything you can to try to drive it forward. I think that there's a big misalignment today where a lot of venture firms, they invest in companies, and if it fails, it doesn't matter to them. That's not fair because for the founder, this is everything for them. This is their company. They have all their eggs in one basket. And we want to align a bit more and be concentrated. And so while it seems risky that, Thrive is more concentrated than most venture firms, we actually think it's less risky because we have higher quality companies and we're doing everything we can, so actually increasing the probability of success. The other thing is that we're really focused on the long term versus the short term. I think, when we first talk about it, you'd be like, well, you'd have a better chance of predicting what's going to happen in the next 2 years than the next 10 years. But actually, when you step back, the things that are easy to have macro conviction on are the things that are going to be true over 10 years. It's so hard to predict what's going to happen over the next year or two. There's so many changes. Right now, we're in a moment of macro uncertainty. That changes what's happening right now. But if we step back and say, what are the things that we know are going to be true around 10 years? Those are the things we bet on. We set up our firm to have that long-term investment horizon. But in digital health, are there going to be more interactions that are online and personalized and customized to individuals than they are today? Absolutely. How do we participate behind that? In payments, are more going to be online with modern acquirers than kind of offline? Absolutely. How do we participate in that? And so those are the things we kind of step back and look at. And then just the last thing to focus on is we focus on being multidimensional versus one-dimensional. And business building is complex. It's hard. It's rarely a linear line. There's moments, there's ebbs and flows. There's moments where product is everything. There's moments where go-to-market is everything. And if people are so one-dimensional, one, you think you miss the bigger picture. But two, actually, if you're able to hold many things in thought, it'll make you better at any specific thing. If you're so obsessed and just focused on product, you're probably not going to have the best product because you need to be able to interact all these things together. Rarely is something easily put into a box. And so we think about with the firm, like we don't have an early and a growth team. It's all one team. People kind of support across all these dimensions. We're generalists as a firm, even though we have moments where we invest across spaces. And all those things we think bundle up in a way to kind of be differentiated.
Let's touch on, you mentioned structure and macro.
Yeah.
So let's touch on that before we go deeper on some of the things you just talked about. On the structure side, early this year, a group of high net worth individuals bought almost a 3.5% stake in Thrive for $175 million. Billionaires like Mukesh Ambani from India, Henry Kravis, KKR, Bob Iger, CEO of Disney. What's the strategy behind this?
Yeah. One of the things we're reflecting on is, again, we want to be partners with founders throughout the entire journey. And we think the companies that are being started today look different than the companies that were started 40 years ago when venture was first started and created. Those companies were being built for 3 or 4 years. Maybe they would IPO, maybe they would flip to Cisco. I think over the last 2 decades, we've seen massive companies being built, like Amazon and Google and Facebook, that allows founders to start dreaming from the beginning that they're going to build a company over 10 or 20 years. And so when founders are starting companies today and they know they're going after these big ambitious goals, but we want to partner with these most ambitious founders, we have to think differently about the venture industry and how do we set up Thrive. And really, we just feel fortunate that we just, such experienced leaders that you kind of mentioned, leaders and people who have so much knowledge and wisdom to kind of share, not just with Thrive as we're building Thrive, the firm, but with our founders. And so it's kind of we can expand our network, create that access for our founders, help them benefit from the wisdom across lots of different industries, help them think more globally. Companies are thinking globally earlier in their journey. We just want to make sure that Thrive is a place that if founders are starting for a company, want to build for multiple decades, that we're able to kind of support across all those dimensions. And we feel this is an exciting step for our portfolio.
And when you talk about that access and that wisdom, what's been the level of involvement of some of these billionaire leaders, global business leaders? What's been their level of involvement so far, and what to expect going forward?
We very much view it as a partnership. And so the way we structure it is for this to be long-term, for them to be engaged with Thrive. We don't view it as like one company that they're going to help with or one engagement or one moment. This is really about we're building Thrive for the next decades. We're working with founders to think about the next decades. So it's hard to kind of capture in one moment, but this is something that's super important about us, with everyone who's a part of Thrive. And so we really think about supporting in kind of every dimension, but also with a long-term lens, not just one specific thing.
Macroeconomic environment, challenging, increasing by the day, recessionary, inflation, job cuts, bank failures, Silicon Valley Bank, Signature Bank. Several VCs, including the big brand funds, have written down significant portions of their portfolios, especially investments made over the last 3 years. Roughly 90 health tech unicorns had valuations pulled down more than 30% last year, with more knocks coming this year. What's happening in this industry and why?
So many good things. No, I mean, obviously the cycle right now is one that's more challenged from a macro standpoint. A series of kind of things that feel like headwinds to kind of what's happening on a macro standpoint. But something that we're really focused on, and part to my statement of long-term thinking versus short-term thinking, it's so hard for us to know what the next year is going to look like. A lot of these things are unpredictable, but we have such high confidence in a lot of the bottoms-up macro trends that we're seeing being created for a lot of our companies. And in the same way that 2 years ago, all the headlines you would have said would be so positive, companies going public, things growing very quickly, technology being accelerated. We try not to get so caught up in what's happening for better or worse, and really thinking about how are individual companies building, what's happening on the ground level that allows them to be created. I think one of the things that sometimes gets caught up is we look at the headlines of today and say that's going to determine the success of these businesses, when in reality what's going to determine the success of these businesses is what's their product market fit? What are their customers feeling? What are maybe the trends that are accelerating why a new product or new category should be created? Those are the things where we spend a lot of time thinking about. And when we find opportunities that we think are in the early innings that are driving forward, those are the things that we align on, that we invest on, and that's where we spend most of our attention.
What's been the experience at your firm with your investments, given this backdrop of what's happening and all these portfolio company valuation write-downs broadly in the industry? What's the experience at your firm?
Again, I think we're very focused on bottoms up what our company's building, and so we spend less time thinking about what's the exact valuation today, where are multiples trading today, and how are we tracking towards our revenue plan? How are we tracking to our profitability plans? How is our product engaging? How are users doing? What's the next product launch around the corner? Are we going to be able to engage and drive that? That's where 99% of our energy is being driven. Obviously, we're aware of what's happening in the headlines and maybe where capital's moving. You can't build a company totally in a vacuum because capital's a part of it, investors are a part of the journey. But that's a very small part of how we think and spend our time and energy, and all of it around how do you build a great business, and ultimately how do you control your destiny as a company versus kind of the whims of the headlines of today.
On building a great business, take us into your investor pattern recognition. We're here at the Vive conference, thousands of startups here at the conference and out there who would love a check from you. Your pattern recognition on the characteristics, the metrics, the attributes you look for you to write that check and invest in that business and founder.
Yeah, I'll narrow it down to healthcare just because, again, we're at the Vive conference. There's a lot of healthcare companies here. I think the first thing is maybe just talk about our frame and approach to healthcare investing, which is probably a little bit different than most Silicon Valley firms. The first is that I think, one of the views sometimes is kind of build outside the system. The system's old, the system's antiquated. We're very much looking for companies that are able to meet where healthcare is today and hopefully grow with it over time. Healthcare is a $4 trillion system. It's the fourth or largest GDP in the world. It's the size of Germany as an entire country. Something that big is not going to change and evolve to some outside part of the system. You have to go meet patients where they are today, whether it's with health systems or payers or others, and maybe help them grow and evolve over time. You can't create some totally new business model and expect that everyone's going to catch up on the timeline that matters for your company. And so how do you work with the business models that exist today and integrate into those payment schemes and kind of evolve and grow with that? So we're looking with companies that embrace where healthcare is today, but know that we need to grow and have it change over time, because obviously there's so many things that got to change and get better. I think the second thing is that we want to back companies that have big ambitions, not small ambitions. Again, I think classical Silicon Valley wisdom is MVP, get that out there, grow and evolve. I think that works for a lot of industries. I think that doesn't work in healthcare. And part of that is you can't go sell a solution to the industry, a tool to the industry, you have to go sell a solution. The existing players, if you're selling to them, they're not adapting 1,000 solutions or maybe adopting one or two. How do you make sure you're solving a big enough problem that it rises to the list of priorities, they're able to kind of go work with you? Two, the system is kind of not set up to try a lot of new things. It's siloed, it's high friction in terms of integration. And so they can't work with 10 or 15 different companies. They need someone who can kind of own a lot of different pieces. And then I think you got to own the problem and solution. At the end of the day, you might be able to improve your little slice of what's happening, but if that doesn't improve the whole process, we actually didn't gain too much from it. And so how do you own the solution? How do you own the problem? How do you build something big enough that we can actually make a dent in how things operate? And then the last thing we're really focused on and is not just how you build a good business, maybe a company's worth multi-billion dollars. Obviously, that's a great outcome. But how do you build something that's actually going to build a dent in healthcare? We have so many things that we have to go change. Healthcare costs, no secret, continue to grow year after year. We've almost become callous to the fact that it's 20% of GDP, that it's $4 trillion of spend, that it's 25% of our federal budget, that it's, for a lot of families, it's 30 to 40% of their income is going to healthcare when you add it up between employer premiums to their health insurance, when you look at where their tax dollars are going and how that's being invested. And so what I'm worried about is we might have a lot of digital health companies that maybe turn out to good financial outcomes because they built companies that sold great solutions to other tech companies and they made good money that way. But if we step back, we'd say, did we really make a dent in how healthcare operates today? So we're really looking for founders, people are building that are targeting 100 million individuals. And that takes people thinking outside of their local neighborhoods and communities, just given that so many of these companies are built in New York and Silicon Valley. Really think about how do we build companies that scale across America, to one, have ambitions around that, and to plausibly think, how do we go target 100 million individuals? And so if you look at the companies that have been attracted, that we've started or invested or built today, it's a health insurance company, it's a PBM, it's a mental health network, it's a full stack pharma company, it's capitated at risk providers. It's these things that we think are big problems that are going to take energy to kind of scale. But when we succeed, hopefully we're going to make a real dent in healthcare. We kind of look and bend the cost curve, because that's not just a nice to have right now. I think it's a real imperative, just given where a lot of things are going.
Kareem, thank you so much for joining us.
No, thank you for having me. So good to see you.